We've had a conversation already with Bank of America about the yen, but interested in your thoughts on what we've seen here, because it was a really big move in yesterday's session. And some would say, you know, if you're going to be the BOJ and you're going to intervene, then you do it on the back of some weaker than expected inflation data out of the United States. That all makes sense. And the B of A saying this morning, you know, it could very well have been the BOJ. What are you hearing?
Yeah, look, I think we've got no official confirmation. I need to be clear on that. But I think that is very much the consensus belief there in markets, that it was the MOF who came in yesterday. Perfect timing, of course, on that data print. Yields jump lower. What I think is really interesting is, given that it was such perfect timing, we saw dollar come lower. We saw yields come back 10 basis points lower across the board. We saw stocks come off. And yet dollar yen, yeah, sure, it had a bad day, but it still hasn't been able to break the big, you know, the steep long-term uptrend of this year. And therefore, I think actually that the price action must be very, very worrying for yen bulls. I think if it was intervention, and I must reiterate that we don't have official confirmation yet, well, then it's very likely that they would follow up again in Friday afternoon, Friday evening Tokyo time, when we get the US PPI print, even better liquidity, to really hammer home their advantage. It's the way they tend to work. So I wouldn't be surprised if we see more dramatic moves today and finally a break of that trend line, and dollar yen ultimately go much lower over the next couple of months, especially if the inflation data today gives Powell the chance on Monday to confirm a rate cut is likely coming in September, and July might even be in play. Unlikely, but in play. So dollar yen could come much lower over the next month. Ultimately, though, it still looks really negative for yen for the long term. You maybe stand aside for now, but later on in this month, macro traders are going to be excited to short yen again on crosses.
So some of the yen moves coming, of course, off the back of that CPI report. But another major move that we saw in the currency market, Mark, was cable hitting 129. And if we continue to see that weakness story, how high or how strong does cable get?
I'm getting actually pretty excited about the sterling story. I think I've been looking at more against the euro, actually, interesting enough, because I think they have, you know, divergent growth stories. You know, we were very negative on the UK economy. It's doing better. We're still pretty negative on the European economy, and it's not getting particularly better. And some of the strong performers like France and stuff are getting a little bit worse. We've got the political divide. Suddenly, the UK has stable political leadership. I know that sounds like a bizarre comment to say at any point in the last 8 years, but it looks like we're getting stable and strong leadership in the UK. In contrast to when we're getting very hyped political difficulties in France, one of the key pillars of the European economy. So I think that divergence is quite important. We're also seeing the fiscal situation where, you know, the concern about UK fiscal situation was done a couple of years ago and they've got their lesson. Now we're getting very worried about the French situation. So I think growth, fiscal situation, politics means that sterling can continue to outperform euro. And I do think we're potentially in a dollar turning point. I think the US election will be negative for the dollar this year. And I think when you combine that with the fact that now the Fed looks like they might be able to start their cutting cycle, they're going to start being dovish, I think that you'll see a world where dollar softens and sterling does better against the dollar than the euro does. So yes, I think cable's going to pop above 130 in the weeks ahead and can really run.